Come to market momentum. We'll see overview of the Indian stock market. Nifty 50 closed at 24,435, down by 36 points as domestic sentiment worsened on the back of weak quarterly results from majority of large cap stocks. The index touched an intraday high of 24,604 on open and consolidated at lower levels. Nifty Bank closed at 51,239, down by 18 points. Outperformed Nifty with HDFC and Bajaj Finance strong movement. So Sensex closed at 80,081, down by 138 points with a negative bias. Let us see some market summary here. So sectorial wise, if you see the performance, top gainers are Nifty IT surged 2.38%, driven by gains in Infi 1.2%, HCL Tech 1.3%, Tech Mahindra strongly moved with 2.3%, and TCS 1.2%. Nifty FMCGs closed marginally higher with 0.16%. Top losers. On the flip side, the Nifty Auto, Energy and Pharma indexes continue to slide during whole day. Mid caps and small caps, broader market indices also saw gains, with the Nifty mid cap 100 up by 0.65% and Nifty small cap 100 raised by 1.25%. Mid cap saw strong buying in the realty and pharma sector. So let us see global Q summary. US markets, the Dow Jones closed 1% red, while the Nasdaq also down 1.7% amid rising yields, election jitters, and corporate earning in focus. When it comes to the European markets, major indices closed mixed, with the Germany's DAX closed flat as the IMF cuts forecast for Germany economy this year for the next year as well. While France's CAC 40 closed flat, driven by growth concerns and corporate earnings in focus. Asian markets, the Nikkei 225 is down 0.85%. Meanwhile, the Shanghai Composite higher by 0.5%. Geopolitical concerns, ongoing negotiations over US-China trade relations, and the ongoing Israel-Hamas conflict continue to create uncertainty, especially around energy and tech sectors. Investor sentiment, the US VIX rose to 19 plus, indicating increased volatility and risk aversion among investors. So if you see the domestic triggers, the muted Q2 earnings from key financial companies and added to the negative sentiment. India's September CPI came in at 5.49%, higher than expectations, raising concerns about rate cuts by the RBI. So when it comes to the FII and DII data, FII keeps selling Indian stocks. Today FII sold worth of 5,685 crores and DII bought worth of 6,040 crores. So if you see other Qs, currency market wise, the US dollar index rose by 0.4%, signaling strongest demand for the USD. The EUR USD is steady at 1.07, but emerging market currencies like the INR weakened all-time low to 84.082. So when it comes to the commodities, Brent crude is trading at $75 per barrel, down 1.1% from yesterday's close on concerns about supply increase from OPEC. And gold is down at and trading at 2730 per ounce, indicating mixed market sentiments. Bond yields, US 10-year Treasury yields are at 4.25%, reflecting expectations of continued rate hikes. German bond yields remain stable at 2.3%. Economic data wise, US CPI data came in hotter than expected at 2.4%, fueling speculation about controlled rate cuts from the Federal Reserve. The European Central Bank has already cut the rates in their last meeting. Okay, let us see one strategy here, trading strategy. What can we follow in the market for upcoming days? Overall market sentiment is in a negative mode. Markets are in negative mode with a bearish movement. The weak earnings, rising inflation that elevates interest rate cut concerns. As global uncertainties lingered, India VIX rose 1.53% in yesterday's trading session, reflecting increased market volatility. When it comes to the OI data, PCR is 0.61 with highest put rating seen at 24,000 followed by 24,200 and 24,400 strikes. Same time, highest call rating seen at 24,800 followed by 24,700 and 24,600. Of course, 24,500 also has some kind of open interest placed, which indicates market weakness. So in the Nifty, it Nifty hit new month low and closed below 100 EMA. Nifty exhibiting bearish trend as of today's trading session. The selling on rise is the right strategy. If it reaches 24,800 levels, one can follow sell on rise strategy. With a strict stop loss of 24,995, which is 50 EMA, 25,000 approximately. So the strategy what we can follow is on rise one can consider selling 25,000 CE for October expiry with 30% strict stop loss. Please do execute your trades with a strict stop loss only. So when it comes to the supporting points are RSI is at 33, MACD is minus 155, ADX is 25 and moving averages are 50 and 100. 100 are suggesting sell and rise because 50 is closed below 50 and 100 moving averages. So which indicates weakness in the market. So one can consider selling 25,000 call. When it comes to the bank Nifty, it suggests during the trading session, it suggests neutral with a bearish bias signal, but it was not a strong bearish. Today expiry was very smooth. So Wednesday's expiry was very smooth. So when we observe Fin Nifty, that is closed in green, suggesting slight bullishness in financial sectors. So one can follow the strategy like keep selling 50,000 put and below strikes for October expiry, maintain the quantity lower, and you keep on add the quantity whenever you found 50,000 put at a decent price. So that too you have to execute your trades with a strict stop losses of 30%. So please consult your financial advisor before executing the trades. Thank you. Please do not forget to subscribe the channel.